Hello, everyone, and welcome. This is Nat Bullard from Bloomberg NEF. Thank you for joining us all here at the Toronto Global Forum. Today, we're going to be talking in this particular session about climate change, investing in climate change, and how some of the world's leading institutions are thinking about this as an asset class, as a way to shape their businesses, as a way to be thinking of not just investing in the future, but potentially future-proofing their own companies as we go. Really delighted at the panel that we have gathered here with us today. And I'm just going to have everybody go through in a sort of quick sequence, tell me a bit about who they are, what company they're representing, and give a little bit of flavor about what their view is on climate. Is this something beyond just, does climate change exist, but a bit about what it means to your organization. And Suni, I'm going to start off with you, so I'll kick it to you.
Thanks very much, Nat, and thank you, everybody at the Toronto Global Forum for having me here. So I am Suni Harford. I am president of UBS Asset Management, part of the UBS Group. Been in the industry now for 35 years. I have the privilege at UBS Asset Management to manage a very large book of sustainable investments. We celebrate our 25th anniversary in the space next year in terms of investing clients' money in that particular vein. I also, as a member of the group executive board, am the executive sponsor of our sustainability efforts across UBS Group. In terms of UBS, well, hopefully everybody knows what UBS Group is. It's a large financial institution, global financial institution, investment banking, wealth management, personal and corporate banking, as well as asset management. And climate means a great deal to us. We signed up to a number of PRI initiatives some 20 years ago to talk about climate and the transition to lower carbon. So it's very much first and foremost for us as both the group, our entity itself, the company, as well as providing our clients with the education and the products they need to invest the way they want to help drive climate change, or rather the transition to a low carbon economy.
Right.
With that, I'll turn it back to you.
And thank you. And you'll find throughout this discussion that I'm constantly demystifying some of the terms of art that are there. So just for everyone's edification, PRI, as I recall, is the Principles on Responsible Investment. Is that right? I hope so, because that's what I'm going to call it. I get a thumbs up for that. Okay. Dean, I'll throw to you next.
Yeah, thanks, Nat. And I'll just say thank you for having us. I think it's a really important topic. So I'm the president and CEO of Sun Life, and we're a global insurance and asset management company. We operate in about 26 countries around the world, and we manage over $1.1 trillion of assets under management for our clients. And we do that not just assets behind insurance liabilities, but through MFS investment management, and more recently, SLC, which is our alternatives manager. MFS is a little over $700 billion, and SLC is now pro forma around $135 billion. And for us, sustainability, so think of an insurance company like Sun Life. We started 155 years ago, but we think in long-term time frames. So sustainability is kind of core to who we are as a company. And we think about it in terms of the health of our clients. We think about it in terms of the sustainability of our business model, the sustainability of the communities and the countries in which we operate in and all around the world. So I'll stop there, Nat.
Thank you very much. That's very good. And how much, just so I can ask, how much active investment in climate or how much risk offsetting around climate are you doing at the moment?
So it's a really interesting question. In our MFS active management business, about 70% equities, 30% fixed income. We actually we have not created standalone sustainable strategies or products per se. Instead, we have infused sustainable thinking into all the investment decisions that we make. And we do that. We've got a robust framework for doing that. It includes everything from fundamental research to themes to third-party ESG data to risk management. And the outcome of that is, if you look at the top 10, for example, top 10 mutual fund equity firms in the United States, MFS is ranked number one in terms of by Morningstar in terms of the assets that have high sustainability features. And ranked, gets straight A's in the UNPRI metrics. Suni mentioned a second ago. So we've taken a different approach, and it's actually harder in some ways to actually get the whole firm, every single investment decision being looked at with a sustainability lens. In other parts of the company, so for example, we've got around $16 billion of our general account invested in sustainable investments, $6 billion of renewable energy, and so on. And then a big chunk of the SLC alternatives business, including Infrared, which is a infrastructure business we acquired earlier this year based in London. A big chunk of their book relates to renewable investments.
Thank you. That's actually quite comprehensive. Blake, if you could tell us a bit about where you're at.
So, hello everybody. Thank you. Over my shoulder here is a view of Toronto, so I hope you can see it. And there's City Hall, which I work for 500,000 pensioners, and so I get to look down each day, not in a literal sense, but in a general sense to who we work for. So I work for one of Canada's largest pension plans. It's my privilege to be the CEO of OMERS. We have roughly a little over $100 billion invested around the world, split roughly 50-50 between capital markets and credits on one side and privates on the other. And we've been probably a leader globally in terms of our allocation of privates. So we own a significant infrastructure business, a real estate business in the form of Oxford, about 22 private equity companies, and some ventures and sort of growth equity funds. And that's the other 50% of the book. And today we're operating in about 16 time zones in about 50 different offices, 4 central global offices, but through our investments in offices around the world. And to me, let's face it, we're moving towards a low carbon economy. We're all aware of it. To ignore it would be at your peril. I think you'd miss huge investment opportunities. I think you would enter risks that are not fair to our pensioners, and you would frankly be ignoring the maddening cry from the board, from our employees, from our customers, and most importantly from our members, because every year I go to the annual meeting and that is first and foremost on their minds. So it's embedded in all that we do. It's not words, it's real decision making today as an organization. And I'm proud to be the custodian of this 58-year-old institution for a period of time. My job is to make the campsite better than how I found it. And I take that job seriously, both for the plan, but also for our society and our environment at large. So those are quick thoughts, Nat.
Thank you. Tell me, I'm very curious to hear that this is so front of mind for your members and that it comes up that often. Is that been consistent over time, or is that something that's new, that's more emergent?
No, I think it's a dimmer switch, and I think it's been at a low volume for a long time. And yet incrementally, year over year, we're seeing that switch come up. And so, yeah, I would say 4 or 5 years ago, it would be a question to make sure we were ticking the box. Today, it is a question of substance. That means, what are you really doing? Show me. And so every year moves in that direction, in my opinion.
Thank you very much. And Judith, we'd love to hear from you.
My name is Judith Hartman. I am the CFO of ENGIE, and I am also in charge of corporate and social responsibility for this very big energy company, of course, that ENGIE is. We're a global company, about 65 billion euros of revenue, and our activities are mostly around electricity generation, really very global platform there, 100 gigawatt installed. We distribute and transport electricity and gas. And then we also have a client solutions business, which helps our customers to be more energy efficient on topics such as running their district heating and cooling, but also solutions around smart cities, for example, for our city customers. For us, ENGIE, the climate change is something that we take very seriously. We believe to be a player in the energy sector of the future, we need to reduce our CO2 footprint. We have reduced our CO2 footprint by half already in the last 5 years. And we're really looking at the energy transition as a major opportunity for us to invest into, of course, renewables, into the greening of gas with more biomethane, but also green hydrogen. And then, like I said, also energy efficiency measures for our customers.
Thank you. And Judith, a question for you. At what point did your organization sort of begin this process of decarbonizing portfolio? And, when did that become a strategic imperative for the company? And how challenging was that to work through it from a management perspective in the earlier days?
So I think the biggest move really that we did that really where we made a big shift is 4 or 5 years ago when we decided to exit all coal opportunities. This was a big decision. Now it seems an obvious decision 5 years later, but at the time, coal generation was 10% of our results. And it wasn't just, that piece of very important percentage of the results, but it was also, there was a lot of opportunities still for new development. We made the decision to not go after any additional coal just because we felt that if you are thinking long term, then it is really a risk, not just for the environment, but also for your financials. And, again, 5 years later, it seems like an obvious decision, but quite frankly, that was a big shift in the thinking of the company. And of course, since then, we have really mostly invested into renewable generation. And like I said, also energy efficiency.
And certainly, I think this is very well said. 5 years in the future, now, it seems quite obvious, but it was quite decisive at the time. And I'm sure that there was plenty of pushback from others involved in the decision-making process. This is something that we encounter over time, is that things look obvious in retrospect, but we're a little bit more bold in real time. And that actually, having listened to all of this discussion from everyone, that actually leads me to the second question I want to get to, which is, how do we think about investing in climate change? Because it's for one thing, it's more than a theme, right? It's a sort of a layer on top of everything. But for companies, for asset owners, for operators, it has to be split up into pieces. It has to be split up into something that you can do. And so, Cindy, I'd like to start back with you. Like, how do you think about this as an investment? What do you screen for? What do you include? What do you exclude? And how do you approach allocating capital in this sense to something that is bigger than just an idea?
Thanks, Nat. It starts, obviously, we have a fiduciary responsibility to drive returns. That means we're managing risk. And you can break down climate risk into a number of different types of risk. So there's the acute risk of extreme weather events. Obviously, there's the chronic risk of, coastal plains and rainforests and whatnot, the financial implications of reduced revenue, the impact of those risks, increased operation capital costs, et cetera, depreciation due to the damage, et cetera. And the transition risks are the more interesting, right? Because again, the first are fairly easy to predict. Never say that as an investor, but you know what I mean. You can see them coming. They're fairly transparent when you see them. You know what they are. But policy, regulations risk, litigation risk, the spend, the amount of money that's going to be spent on technologies that are going to be old before they're even new, right? So there's risk involved in terms of that transition, the market risks of changes in consumer behaviors or the supply chain. So there's a tremendous number of risks. We look at all of them. We have mostly our product, and we have a climate aware product that we launched in 2017. We're almost 20 billion in just climate specifically. And it allows clients to choose their glide path, if you will, of how fast we'll get to 1.5% or a 2% carbon world. And it has a little bit of both, right? It is about transitioning for us. There are some names that would be excluded, of course, but generally we want to watch over time. We want to engage with our clients and see and track their progress over time so that we capture both that the bad behavior, if you will, as well as reward those companies who are making the investment and driving change for their capital. So it's a little bit of all of those things, but it's a very hands-on, engagement-based model for us at UBS.
So you're building like an active portfolio that says this is the 1.5 degree scenario portfolio. Like these are the companies that are on that path. Is that did I get that right?
Well, yes, it's a little bit of both. So we have an index rules-based strategy. We have a passive strategy per se, but we did just launch active strategies for climate aware across both equities and the fixed income and multi-asset space. So it's a little bit of those things. So it's identifying and downplaying the I don't want to say the bad performers, but those that aren't moving as quickly as we think they should, and taking that opportunity, as well as rewarding those that are taking the opportunity, investing more in R&D, et cetera, and moving more quickly toward that climate world. So investors get to choose how fast, and therefore we balance the portfolio according to their specific needs.
Got it. And how's the investor appetite for that?
Huge. It is tough to keep up. So again, it's interesting to watch ESG broadly defined, but it feels like we've leapfrogged right away from the broader integration. ESG means a lot of things to different people, to very, very specific goals and opportunities for individual clients.
And Dean, you had actually already alluded to this notion that ESG was sort of across things, but I'm curious if you wouldn't mind revisiting and amplifying that a bit. Like how do you make an investment thesis out of this if it's already so embedded? Like, is it not even a thesis? Is it just one of the many themes, or is it something that you really have to continually refine and build?
Nat, it's like many big systemic shifts. It's not one thing; it's everything. So just to pick up on some of the points that have already been made, it's a small example, but in Canada, we have the largest defined contribution investment platform in the markets, a little over $100 billion of assets under management. And, back to the point raised earlier and Blake raised this around the level of interest, we just rolled out a new sustainability set of metrics. So our plan members, there's over 1 million Canadians on the platform, can look at their investments on the platform through a sustainability lens. I talked about what MFS is doing. And to Suni's point around engagement, MFS, was ranked at the top in terms of actual support, roughly 60% support for environmental and social shareholder proposals raised through the proxy process. Our alternatives investment business putting more money to work in renewable energy, and the acquisition of Infrared Capital in London earlier this year was in part to help them build out their platform of renewable projects in the United States. There's a lot of opportunity for that to grow. So it's not one thing; it's almost everything. And we've been fortunate enough to be on a list of the 100 most sustainable corporations. We've been on that list for the last 11 years, but every year we think we've got to do more. This is not bad, but we've got to do more. And as I said, it's not one thing; it's everything.
Thank you. And Blake, I'll pass that back to you for the same. What's the thesis as you look at it between investing actively, invested passively, investing in specific assets and specific companies? Like how do you go about it?
Every number that Dean mentions, we're smaller than he is. Just so you know, I'm used to it in this Canadian context. So no, we're the same. We really don't wake up and say thou must invest in sustainable assets. Our number one goal is to deliver on the pension plan promise, but it's embedded in all that we do. The core mission of our plan is to be a sustainable, affordable plan and meaningful to our 500,000 plan members. And that sustainable word is part of the context. And in our sustainable investment policy, the fundamental statement is we genuinely believe in companies and assets that are very thoughtful and have very, appropriate practices and principles in respect to ESG. So we start from there, and we've broken down the policy into integration, engagement, collaboration, and adoption. And so everyone in our organization, the filters are integration. There isn't an investment we do of any size that doesn't go through an ESG filter. There isn't an asset that we own that doesn't go through an ESG filter from an asset management perspective. From an engagement perspective, we've said to our teams, whether we're investing as a syndicate or whether we own something, when we own something, we obviously have better control of the board and we can dictate what our expectations are. But failing that, if we're investing in part of a syndicate, we make it a priority. Collaboration, we're talking to other industry players. We have signed on to a bunch of the sort of global organizations to, gang tackle this problem and be thoughtful together and learn from them. And adoption is that we can always get better. As Dean said, we're at a certain point, but we're committed to getting better. So that gives you some of the embedded principles within our sustainable investing policy. We have a sustainable investment committee. We have a climate change committee. We cross-pollinate with them to say what makes sense. But we're not waking up each day and saying, real estate, you must invest X, or infra, you must invest X. By making it a priority in a global context across the whole organization, our teams wake up knowing what's important to us, and they wake up knowing that they have to be very thoughtful on these matters.
Tell me a bit about this climate change committee. I'm actually very interested to hear what that looks like and how it interacts with some of the other committees that you would have.
So it's really, and it's very new, by the way. We sat down. Our sustainable investing committee isn't new. We've had leadership starting with our CIO in that role. We've had representations from all of our businesses, from our ESG team itself, but also HR and others are all plugged into that committee. And a subset of that has just been to start looking at the big macro trends from a climate risk and opportunity standpoint. And let's, what's a business plan? It's what am I great at? How do I get in the way of a trend given limited resources? We have to know what the trends are. We know what we're good at. And they're really focused on, macro trends that we can adjust our investment policies to draft behind.
Got it. Very good. And Judith, you have the pleasure of building all of these things. You're the one who's actually putting the steel in the ground for all of these different assets in these different places. So what does the process look like? What is your market identification? What is your asset size or technology risk? How do you, as the person who's putting the steel in the ground for these projects, go about making a climate investment thesis?
So, like I said, it started with having a view on where you want to take this strategically, and the conviction that combating climate change is actually an opportunity for an energy company. Do you want to be part of the problem, or do you want to be part of the solution? So we clearly took the stance to be part of the solution and have massively reoriented our euros, the investment capex, but also as an industrial company, it's also about your business development effort. Where do you point your teams? When we, I mentioned earlier the coal exit, and had we just left everybody going as they were, we would have pretty much the same portfolio as we did 5 years ago. We made the conscious decision to say we believe that wind, especially wind, but also wind and solar are a big opportunity for us, where we can invest and create value for our investors, and by doing so, future-proof the company. Because, again, I mentioned earlier, looking back now, only 5 years ago, it seems like such an obvious thing, but back then it wasn't. So the opportunity is there, the technologies are there, and so really it is about making sure you point your development effort in the right places. Make sure you come up the learning curve, industrially, of course, and operationally, and put the right levels of capex. And that's what we've been working on. We're very proud to have gone through the science-based target certification at about a year ago, which means that our trajectory and our strategy is in line with the CO2 or the targets of the COP21 Paris Agreement. And really, that's how we challenge ourselves when we're looking at investments. Are we in line with that 2 degree or 1.5 degree scenario? And are we putting enough money into mostly renewables, but also, like I said, energy efficiency? And it works out well, quite frankly. It's now part of the day-to-day processes. It's now part of the DNA of how we run our investment committees and how we make sure when we do the strategic planning that we are in line with these commitments.
I think the science-based target commitment is really, for those who use it, an essential way to screen and to process investment. I think it's very, very important. And the more organizations do it, probably the better for making long-term progress on climate. You'd mentioned, wind and solar, and I think the panel here would be in broad agreement that these are all now, trillion-dollar investment classes and all investment grade in most markets. But do you see anything else coming that could echo that scale and achieve that level of maturation, relatively low risk, ability for lenders and sponsors to price it? Do you see anything coming next beyond wind and solar?
The wind and solar are now a completely commonplace, obviously, and there's lots of opportunities for us to invest in many countries and for decades to come. 260 billion of euros of investments are going to go into renewables in the next 5 years alone. So there's, plenty of opportunity, of course, for many of you to invest there, and for us, obviously. The one thing that we're looking at also now further out into the future is also the greening of gas. Biomethane is something that we're already investing in today. We're a leader here in France, but it's something that we want to become also more international on. And then if you ask me, 5 to 10 years out, what are some of the things that we're already thinking about? It's really green hydrogen. So basically using often excess electricity from the intermittency of renewables to then transform water into hydrogen and oxygen, basically, and using that gas, the hydrogen, for different uses industrially, but also for transportation, for example. So it'll take some time for it to be economically viable, but with the relaunch plans also, coming out of this COVID health crisis, a lot of the governments are putting a lot of money into green hydrogen, and we definitely look at this as a huge opportunity. France alone, if a year ago, had I been sitting here, France had planned to put 100 million into green hydrogen. They're now talking about 7 billion euros. 2 of which in the next couple of years. So quite frankly, there's a huge opportunity here to scale up over the next few years. And hopefully, again, we'll be sitting here in a few years from now and say it's so obvious now. Green hydrogen is now at scale and is at the right economic terms because it will be a great asset in the bigger scheme of the energy transition.
Thank you very much. Just a reminder to those who are listening in, we are able to take some questions. So if you do send questions in, they'll come to me. I'm about to put our first one through. I would ask that if you want to specify a target, if you want to have a particular person you'd like to answer that question, please do make sure to specify. But I'm going to go quickly. I want to go back to that hydrogen idea. So I want to go quick, rather rapid fire for the rest of you three. And get your views on that, because this is something that seems to be at the early phases of an upward curve, but that intersects with lots of different other types of assets, types of markets, types of applications. So I'll do in sort of rapid fire here, Blake, and then Dean, and then Suni. What do you see as in the potential for that from your perspective? What's the potential for green hydrogen?
Yeah, to be perfectly honest, I'm not probably the one to ask. We put a lot of money into renewable wind farms. As the opening story told, we're a huge believer in nuclear. And so I think I will defer to others who may occupy this time better than I can.
That's a great answer. Listen, I actually really appreciate that answer because, we'll kick it over to Dean and let him have a stab at it.
Well, I'm also going to say I don't know the answer to that question specifically, but the one thing I would say though, and it picks up on Judith's point, is the amazing change in technology over a relatively short period of time. So, even the intermittency of renewable, wind, solar, and the cannibalization of traditional electrical, the grid, that seems to be changing quickly. And I think it's one of those things 5 years from now, the potential could be even greater. But specific to green hydrogen, I way out of my depth on that one.
Well, let's see if we do this 5 years from now, if it's not something that everybody's much more familiar with, because it's certainly taking that path. Suni, I'm going to let you have a shot at it if you want.
Well, no, sure. And it's an interesting theory, though. And one of the issues we face as investors is everybody wants to be a little more short term or near term, maybe I should say, in this space. So we have products called Long-Term Themes, which looks at things like green hydrogen and a lot of different things, knowing that not all of them will catch the wave and not all of them will be commonplace. But we have something like green hydrogen, and we do have green hydrogen in our Long-Term Themes book. But it's beyond that. It's still too new for us on a day-to-day to think about more broadly. So I'm not surprised that it's a new idea to many.
But give us some flavor on what the other long-term themes look like. Like, what else would you put into that bucket that's of sort of similar duration, similar maturity?
So and again, I got to go broader than climate to do that, right? Because again, this is so out there. Some of the innovations around cold storage and food, right? Food security is a very big deal in the SDG space. So cold storage, some new flash freeze type technology that can last longer, preserve nutrients, things like that. In the water space, of course, is 1,000 we were talking about earlier, right? How do you convert desert into rich pasture land, et cetera? So there's a lot of themes, a lot in the medical tech space that are out there in terms of how to, the pandemic makes it front and center, right? How to rapid fire vaccine evolution, et cetera, things like that. So there's a lot, anywhere from a 10 to 20 to 30 year theme that you can invest in. And we've got, I think, 37 things on the list. I'll send it to you.
Please do. I think actually we could make the argument, though, that anything food related, because food and agriculture is double-digit percentages of global greenhouse gas emissions, would definitely qualify within a climate theme. Okay, so I've got a question here that I'm going to pose to everybody. And this is wide open, so who'd ever like to jump in first is welcome to, but I'd like to get an answer from everyone. Do you think there will be a global price on carbon? Now, there's no time frame on this, so you're welcome to say between now and the year 2200 if you like. But does anybody want to take a stab? Do you think we will see a global price on carbon? Go for it.
I'll go first because yes, and our chairman Axel Weber has been out actually pushing, and we do believe that there will be a whole new financial system around carbon price, tradable carbon credits, secondary markets, et cetera. So we do think it's coming probably sooner rather than later. A lot of that depends on the consistency around the globe, right? So you talk about levies from governments, which will help with the pricing discovery, as well as trading systems. So World Bank counts 31 GHG trading systems currently, and 30 CO2 levies in place around the globe. That's not enough, and there's very little consistency between them. So it's coming, but it's going to take a lot of work before we get there. But I'll give you a hands down yes.
Okay, excellent. Blake?
I'll take the counterpoint and say global in this post-pandemic world is a word I'd be afraid to vote for. I mean, there's so much myopic inter-sovereign state thinking these days that while there could be a price, I can't see it going global, and I think that we're going to see a lot more some are in, some are out views as 195 countries try to protect their own turf and think less globally than they have in even the last decade.
Yeah. Thank you. Dean, what's your thought?
Yeah, I actually agree with Blake's point, but I also agree with Cindy's point. I think there will be a global price on carbon, and it'll go, again, it's a programmatic thing. That's not just one thing. It's a whole bunch of things. It's trade tariffs and levies. It's TCFD disclosures that ultimately take you there. It's going to be a whole system of things that all, as they all get built up, I think will all converge and contribute to meaningful change. But I think there has to be, I thought Suni said it well, there's already the pieces together, and I think it'll just get bigger as more companies and investors put their minds to this and start allocating capital to this. I think we're going to need some metrics around that, so including price of carbon.
Good, thank you. And I'm going to return in a moment to that bit about TCFD, the Task Force on Climate-Related Financial Disclosures, because it and its peers, I think, are actually very important. But Judith, what's your take? Are we going to have a price on carbon, a global price on carbon?
So I welcome Suni's optimism on this to have a global price on carbon sometime soon. If I had a guess, I don't think it's going to happen in the next 10 years. Why do I welcome her optimism, though? Because I do believe that would actually make a huge difference. I do agree, though, that given that so many countries are going to have different views and different starting points on where they want to move, it might be hard to go to a global price relatively quickly. It could be decades out, to be honest, in my view, at least one decade. But regional carbon prices is probably something that is going to move faster, and that could work for energy systems that are largely working on a regional basis. What I do agree on also that Dean said, there will be, of course, between now and then other measures that are going to be put in place. The investor community is having a huge impact here in terms of, just demanding a certain standard from the companies, and regulation will be a huge topic, of course, over time. And the more we're going to run into tangible climate change, the more we're going to have to find solutions like this. I think a lot of people today underestimate the current cost already of climate change. The fact that there's hundreds of millions of people today that are dislocated every year because of climate change, the cost that it is to all companies on certain topics that we have to adapt to. And so, if you put it all into the equation, quite frankly, again, there are solutions today, and we should all be working on them. So I think we will get there, but the global price on carbon might actually take some time, but there will be other solutions that are going to move us into the right direction.
Thank you very much. Actually, so Dean, I'm actually going to come right back to you about this notion of disclosure, which I actually think is absolutely critical for making secure and sane investment decisions at a time when so much is changing. Can you give a bit of flavor on that for people who may not be as familiar with it? Because I do think it's really critical. What's the state of disclosure around climate risk, and then where do we think it's going or needs to be going?
Right. So I think, as most people know, the Financial Stability Board has come out with, had a task force on climate-related financial disclosures and the TCFD disclosures. And, we are one of many companies that have said we're going to be disclosing our results and complying with that. We're all working through what does that look like and how do you do that? And for users of financial statements, it'll put risk parameters around climate change and demonstrate to investors the risk inherent in a financial business around climate change. It's not simple to figure out how to do that. In parallel, we have help, I'll put it that way, from regulators around the world who are also spending time thinking about, as they think about banks, insurance companies, and others, in terms of capital requirements, and making sure that we are thinking about capital through a long-term lens and through a climate change lens. So we have these two things converging. I think it's a little early to say exactly what it will look like, but I think for users of financial statements, as it comes out, I think it'll shed all new light on the risks inherent in climate change, and that'll be a good thing.
No, I would agree that it will be a good thing. And Blake, I'd be curious to get your perspective on it. I mean, when you and your colleagues are looking across what is disclosed and what should be or could be disclosed in the future, what's your sense for the state of play?
No, I think we're all asked to subscribe to, I don't know how many, we call it alphabet soup. There's a group called an International Leaders Network, which is the CEOs of many pension plans around the world. And we're really we're meeting regularly. We have a back office team that are helping us discern which of these we should all get behind and which of them, and some of them we shouldn't get behind, and some are regional and other things. And that one, to all the Canadians, to the best of my knowledge, we've all subscribed to it, the TCFD, as well as the Sustainable Accounting Standards Board. And so those are two that we, along with others, feel are essential to get behind, to support as a corporate commitment and as a global citizen. And then there are so many others, and it's interesting how many. I've literally probably been asked in recent weeks, and I'm a relatively new CEO of OMERS, having run Oxford for 9 years, which is owned by OMERS. And I can't believe how many dances we're invited to sign up. Those two, though, from my perspective, make 100% sense for the entire global marketplace.
It is, having been to a number of these convocations about disclosure, there are certainly a lot of them. And you know, if we look at the history of other kinds of sort of, you know, accounting and any other kinds of risk disclosure, we probably have not enough disclosure now, but we may have more frameworks than we need for disclosing them. Eventually, hopefully, they come down to a few that are the equivalent of generally accepted principles. Suni, any thought from you on that, on disclosure?
Yeah, I would just add to that the importance of settling on something here, and TCFD and SASB do seem to be leading the way, is that it's going to set the format for future, right? So we're doing a lot in carbon. There's a lot of data available, which is why climate investing is first and foremost. But when we get to water, when we get to food, when we get to some of these other areas, having gone through all of these machinations in the alphabet soup, as Dean said, I think is important, because we're going to need to be able to move faster in the future in order to expand beyond just climate into the other risk areas that come with the SDGs.
Thank you very much. So I want to go through with a little thought experiment, but it's an easy one, so there won't be any stress for anybody. Judith, I found your use of the 5-year timeline very, very helpful. Like, you know, 5 years ago things looked very bold, that today look very obvious. So let's imagine that it's 2025, and we're sitting here having this discussion again, and we're looking back at 2020. What are the things about today that seem really bold that could seem really obvious in the year 2020? And Judith, I'll actually start with you for that.
Or maybe to link it with what you were discussing earlier on disclosure and finding a common language. I would certainly believe that 5 years from now, we are further down that path of really being able to compare better of how an investment, is it in line or not with the 1.5 degree scenario, or with, you know, the zero carbon goal and those kind of things. I think 5 years from now, we will have found a common language between investors and also industrial groups. And then for sure, like I mentioned earlier already, I think some of the technologies are going to be even more commonplace. Certainly, you know, I look at ENGIE, we will by then have over 50% of our generation will by then be renewables. And hopefully we're going to be much further ahead in terms of finding solutions also on green gas, and hopefully maybe even green hydrogen is going to be only a couple of years away by then for the right scale and the right economics. and is going to go into we're going to go into the execution of those projects.
Hopefully so. Thank you. So Blake, a quick one. We're looking back from 2025. What was that was difficult today is going to seem easy in retrospect.
I think there are an awful lot of organizations that are still approaching this whole topic as a box ticking exercise. I think 5 years hence, if you're doing that, you're probably not in business. I think if you're bumping the ball down the field and not taking this very seriously, I don't think your shareholders are going to be taking you very seriously. And I don't think your board should, and I don't think you deserve the right to sit at the table and lead something of substance. So I think there will be 5 years hence, it'll be embedded in all of our organizations. What's interesting, and I think the real estate industry probably has a head start on so many other industries. And about a decade ago, things as simple as, categorizing the buildings with LEED standards, by putting that stake in the ground and by knowing what to measure and by making it not only, available in Western democratic countries, but all around the world, it actually got a whole industry focused. We understood what the games, the rules of the game were. So 5 years hence, I think that'll be so much better known. We'll know what to measure. There will be some universal acceptance about what to measure by industry. And once that starts, watch the progress. And, I would say, literally 10 years ago at Oxford, when I first took the leadership role, I walked into a meeting and I said, we have to be a leader or the leader in everything we do. And we need a team that knows a lot more about that than I do. But there's no excuse because our tenants want it, our people want it. It's a win-win-win. Go. And 10 years later, not to be boastful about it, but Oxford's won literally hundreds of awards, including with GRESB, consistently sort of the top real estate developer of size in this continent, wins it annually, not always, but probably 7 of the last 10 years. We just won a big award through Fast Company, et cetera, et cetera. And that was because 10 years ago, we said we have to be a leader and we knew what to measure, if not the leader. And then you let people work their magic and you measure it, and what gets measured gets noticed. So I have a feeling 5 years hence, we're going to see that universally. Real estate industry is a good example.
Excellent. Thank you very much. We're going to do a very quick speed run here because I'm conscious of time. So you get about 30 seconds each. So Dean, you're first, and then Suni to get the very last word. We're looking back 5 years from now. What are we seeing?
Yeah. Nat, I don't want to repeat the great comments that Blake and Judith made, so I'm just going to throw out one thing. And I don't know if this is going to happen or not, but keep an eye on trade tariffs. Trade tariffs that impose tariffs on imports from countries that are not, whether it's Paris Climate Accord or other goals. Keep an eye on that. I think that could be we might be surprised to see how powerful a stick that is.
And for me, I guess I'd jump in and I'll say the power of the investor. Too many investors in the market today do not realize the power they have. They don't ask about stewardship. They don't get reports on how their shares have been voted. And I think that changes massively in the next 5 years. I think companies are going to be really, really beholden to their investor base, and it won't be the one-off activist investor. It will be every investor they have will know exactly and vote their own shares. Tech will help with that, with climate and ESG principles in mind.
Good. So I actually just got word we got a couple more minutes, so we can actually explore that a little bit more because we do have all of you investors here. Let's unpack that a little bit more in the not quite 30-second version because we've got a few more minutes. Every investor is going to be able to vote with their own information, I think you said. So what kind of scrutiny are they going to have? What are they going to be looking for? And how forgiving or unforgiving are they going to be of companies that aren't meeting the mark?
If we'll start with me, I mean, I think right now, again, It's very difficult. Very few investors, asset managers have reports available so that clients even know. Very few have the technology to allow a client to actually track their own vote as opposed to just letting their asset manager do it for them. So I think it becomes much more personalized. And I think Obviously, if the asset manager doesn't give them that capability, they'll walk from that asset manager. But again, talk about every shareholder vote you have, whether it's around diversity, board makeup, say on pay, climate initiatives. Investors will carry that day, and they'll get to vote their preference. So I think it will be a variety of things, but they will vote with their money.
Yep. Dean, what would you think on that? You got a hand up, so go for it.
Yeah. I mean, I completely agree with Suni on that. We're seeing that at Sun Life, the number of questions from our investor base around the world. I mean, it was interesting. It used to be when I showed up in Europe to meet with investors, they'd haul out our Sustainalytics scores and they'd have a million questions on sustainability. That's all around the world now among our investors, and with ever increasing sophistication. You know, oil and gas companies in Western Canada, for example, will tell you that their access to capital and the cost of capital access has gone down and cost of capital has gone up. And that's a direct result of all of this direction of travel. So I think Suni's absolutely right. Shareholder engagement and activism is going to really drive a big change in the next 5 years.
And do you think, just very briefly, do you think there's going to be any difference market by market? I mean, there still is some difference now, even though you've already alluded that it's much more sophisticated no matter where you go in the world. Are we going to see a convergence on what people look at, focus at, care about?
I think North America is going to have to catch up with Europe. European investors, European companies this is almost existential for them, and you can see that a lot of the developments in this space have come from Europe. But what I think is going to happen in the next 5 years, you're going to see a giant catch up among investors in North America and other parts of the world.
And I think a giant catch up is a great place for us to close off this conversation. So I want to say thank you to all of you, to Suni, Dean, Blake, and Judith for joining me here. And for those of you listening in, thank you for joining the Toronto Global Forum. It was a real pleasure to have you on. Thank you for the questions that came in, and I hope that you enjoyed the conversation. Thank you very much, and thank you, everyone.